Hey there, MTG Crypto Tribe. Have you been watching Bitcoin's wild ride over the past few weeks? Are you kicking yourself for missing out on the recent breakout and wondering if it's too late to jump in? Well, buckle up because in this video, we'll dive deep into Bitcoin's bullish price action and bull pennant breakout to reveal the key levels you need to watch for a potential low risk entry point. Plus, we'll show you how our team at Morpheus Trading Group nailed the perfect pullback entry 2 weeks ago and is now sitting on a sweet 10% gain. Also, be sure to stick around to the end of the video for our special bonus analysis on the hottest crypto altcoins on our watch list right now that may be setting up for potential buy entry in the coming days. I'm Darren Wagner, founder of MTG, and I've been mastering the art of swing trading for over 25 years. If you're ready to take your crypto trading to the next level, smash that like button and subscribe to our channel for more cutting-edge market insights. Now, let's get to the charts and uncover the secrets behind Bitcoin's explosive move. Okay, let's dive right into the daily chart of Bitcoin. As you can see here, BTC broke out from a bull pennant pattern yesterday. The bull pennant is this yellow pattern that we've outlined here. Let's talk about what a bull pennant is and what it means. A bull pennant is formed when you've got a triangle that looks like this. You've got a downtrend line from the highs, connecting from the highs, and then you've got an uptrend line connecting from the lows. And the price action is tightening as the time progresses. So you've got volatility contracting. It starts out with a wide volatility and it tightens up until eventually you get a breakout from this pattern. Now, it's important to understand a pennant pattern that you see here is not necessarily bullish or bearish. A pennant is a continuation pattern. That means typically when a pennant develops on the daily chart, the trend will resume in the direction of the dominant trend. Now, in this case, notice how the pennant formed after an extensive rally in Bitcoin. So because that pennant formed after a rally, that means we've got what we call a bull pennant pattern. And a bull pennant increases the odds of when it breaks out, quickly breaking out to a new high and resuming the uptrend. Now, if this pennant pattern were to develop after a downtrend, and then we see this pennant form, that would be called a bear pennant. And that has odds of breaking down below the lower channel and following through to lower prices. So again, a pennant is not bullish or bearish. It depends on the trend that preceded it. So here we've got a bull pennant breakout from the bull pennant pattern. Now let's go ahead and zoom into the shorter term 4-hour chart to get a closer look at the recent price action. I'm going to go ahead and hide our annotations so that you can see the chart more clearly. And what I would like to focus your attention on is this red line. This is called the 50 period moving average. And this can be used on all different time frames of charts. It can be used on a daily chart or a 4-hour chart or even an hourly chart. But what we found is in swing trading crypto, this 50 EMA on the 4-hour chart is extremely reliable as an indicator of support or resistance. It's a pivotal indicator. And in fact, let's take a look here, look at the price history. Take a look at this back in late February when Bitcoin kicked off its rally. Notice how we had a big pullback, that big correction where Bitcoin dropped 10,000 points in one day and snapped right back up. Notice how the 50 MA is what caught support. We undercut below that, ran stops, but the 50 MA acted as support. And then fast forwarding about a week later, we had another dip down to just above the 50 MA 2 times. And eventually we broke below that 50 MA. So the most important rule of technical analysis is that a prior support level, such as the 50 MA on the 4-hour chart, it becomes the new resistance level after the support gets broken. So here we see the support got broken. And immediately after that happened, we said in the MTG crypto chat room, we said, keep an eye on this level because this is now going to act as resistance. Now, keep in mind, this is a 4-hour chart. So each bar you see here is 4 hours of price action. 6 of these bars is 1 day. And so you can see here the very next day after we said that, that's exactly what happened. Bitcoin rallied up, tried to get back above its 50 MA, but stalled. Notice how, again, we just probed just above the 50 MA, but sellers stepped in and the 50 MA did its thing, perfectly acting as resistance, which was prior support. When we notice this is a clear signal to us that the short-term trend had shifted from bullish to neutral. And once we broke down to a new swing low on the 4-hour chart, now we were looking at a bearish short-term trend. And we're sitting on the sidelines waiting for the Bitcoin to show some type of short-term bottoming action. So as long as we're setting lower lows here on the 4-hour, we're not interested. We're not trying to guess where the bottom is or catch a falling knife. But what caught our attention here was on the 23rd, after Bitcoin rallied up again. Check this out. Look how perfectly that 50 MA on the 4-hour chart acted as resistance. and we pulled back. But here's what we're looking at. Notice how right at this level, you can see that BTC formed a higher low on the 4-hour chart right here. And we'll go ahead and circle that. Notice how from the ultimate lows, the absolute low here was right around the 61,000 mark. And then Bitcoin went on after running into its 50 MA, pulled back, but formed a higher low. Notice this was the first higher low on the 4-hour chart since the correction began. So that got our attention as a potential bottoming pattern. So after we saw this, we told members of the MTG crypto service that we were going to look to scale into Bitcoin on this pullback. Scaled entry means that we were looking to get in two different levels. We get in a small position first, and then we add to the position when we get confirmation. So our first entry came after we formed a lower high, and then the price action popped above the 20 MA, that's this blue line, on the 4-hour chart. So we took a partial position here just above the 65,000 mark, and then we pulled back again, but again, formed another higher low. So now we've got two higher lows. We see the balance of power slowly shifting from the bears to the bulls. And once we got that higher low again, next attempt was the one that broke through that 50 MA resistance. And then we added the second half of our Bitcoin position after the price broke out above the 50 MA, over 66,000. So we got an average price close to 66,000, which gives us about a 10% gain since entry. Now, after Bitcoin broke out above that level, it traded sideways for a couple of days and then broke back down again below that 50 MA. But notably, again, take a look. If we look at this low that formed after we broke down below the 50 MA, we still formed a higher low than the two prior lows. So the trend is still reversing. And what's happening here is we're forming higher lows on the daily chart, which ended up forming the lower channel of that pennant pattern that we showed you. And then just a few days ago, again, look at the 50 MA doing its thing, tried to rally back above it and couldn't get above it. We tried 3-4 times over a course of several days until finally Bitcoin broke out above it. And because of the fact we've absorbed all this overhead supply by this correction here, we formed a higher low. There's not a lot of overhead resistance, not a lot of people that are trapped at higher prices, because keep in mind, Bitcoin's near a all-time high. So when you've got an asset trading at an all-time high, there's not much overhead supply. There's not many people that bought at higher prices that are just looking to sell near break even. So once we got back above this, it's no surprise that Bitcoin very quickly not only rallied back to its prior consolidation area, but popped above it and broke out above that resistance. We can see the horizontal line here. Yesterday, we broke out above that. Now, notice we have pulled back below. All right, we have pulled back below the high of that consolidation, but we wouldn't call this a failed breakout because it's more of a bull flag pattern that's forming on the 4-hour. We're holding at that 8 EMA, the green line on the 4-hour chart. So now if we zoom out to the daily chart and we reapply that triangle pattern, the pennant that we told you about, here you can see those lows on the 4-hour chart that we circled, and that's forming the lower channel of that pennant that's developing. And with the price action yesterday, that put us above the 50 MA. Well, notice how the 50 MA on the 4-hour chart nearly lines up with the 80 MA on the daily chart. So when we moved back above that 50 MA on the 4-hour chart that we showed you here, and when we broke out above that consolidation, that correlated to Bitcoin also breaking out back above its 8 and 20 EMAs. So now we've got Bitcoin trading above all of its key moving averages, the 8, the 20, and the 50. We've got a breakout from a bull pennant pattern. Now, if you're not a member of the MTG crypto tribe and you didn't get this pullback entry, you've got a nice secondary buy point here setting up on the current pullback. If we remove the pennant pattern, you can see a horizontal line marking the resistance that we probed above. Now we're consolidating near that level. So this is most likely we'll see some consolidation, and odds favor Bitcoin breaking out and resuming its uptrend. And it won't take much momentum to get Bitcoin to a new all-time high, and then we could see another leg higher in the market. So you don't want to miss that. But at the same time, you don't want to chase the price. You don't want to chase a runaway breakout. So if you're not already in from the pullback, this current pullback could present a relatively low risk buying point right around the 71,000 mark. But make sure you keep your stop in place. Your protective stop should be below the 8 and 20-day EMAs, because if we break below yesterday's candle, yesterday's low, that's not a good sign. We want to be out quickly. So if we break below the low of yesterday, that's going to put us below the 8 and the 20-day EMAs, and we want to be out. So it's a good risk reward. Basically, we can set our stop around 68,000 if you're not already in. So you've got about a 3,000 point stop, which only is about a 4% stop. And so we'd be looking at a potential breakout to new highs, which gives us a positive risk reward on this trade setup. Now, the one thing that we're a little bit concerned about is the lack of volume on this recovery. Bitcoin did exceed its 20-day average volume yesterday, but it wasn't very impressive. The volume didn't pump high like it was back in the initial leg up. But then again, you don't need as much volume on the way back up after a correction because you've already absorbed a lot of the sellers that would otherwise be holding the price down. But do keep a close eye on that volume. If Bitcoin breaks out above yesterday's high, we want to see that volume confirmation. We want to see volume surging higher, higher than yesterday's level, ideally. Now, if you happen to buy the pullback at or near a level where we entered, then you also want to use a trailing stop methodology to protect your profits and maximize your gains along the way. So when Bitcoin breaks out above this, when it confirms a breakout above this consolidation, that would be an ideal time to raise our protective stop to just below the low of this breakout level, which locks in a gain. If the breakout fails, we still lock in a solid gain. But if the breakout continues to new highs, then we continue trailing our stop higher to maximize profits rather than guessing where the top of the rally is going to be, because there's no resistance when you're at an all-time high. It's blue sky territory. Another possible entry point on Bitcoin is to simply wait for a breakout to a new all-time high, which would be a breakout above the mid-March highs, around the 74,000 mark. Now, it can be scary buying a breakout to a new all-time high. I know when I was a new trader, I used to think I was taught to buy low and sell high. That's the old Wall Street adage. But the reality is you can buy high and sell higher, and that often is a much better strategy for trend traders that are using a swing trading methodology focused on momentum, like we do. So you could look for a potential breakout. When you buy a breakout, though, you need to make sure you have a pretty tight stop in case that breakout fails. You don't want to ride it all the way back down if the breakout fails and people get trapped. You could also look to add to your position if you're already in on a breakout, and then manage your position accordingly. So overall, Bitcoin is looking really solid here. We're above all the key moving averages. Keep a close eye on this 50 MA on the 4-hour chart. This typically acts as a reliable pivot of support and resistance for the short-term time frame. So as long as we stay above that, our short-term momentum is going to be on our side, on the bullish side. But we want to get out quick if we break below these 2 moving averages. Now, as we mentioned in the beginning of the video, we've got a few altcoins on our radar. These are the top altcoins showing high relative strength. And with the MTG strategy, we don't chase breakouts. If we don't get a breakout, we wait for the first pullback to support. So what we're going to show you here is the top relative strength altcoins since the latest correction began. First up, let's take a look at Ethereum, ETH, the queen of crypto. Typically, we follow Ethereum because it's a reliable indicator of the overall health of the altcoin market. And we can see that Ethereum corrected sharper than Bitcoin. That's not unusual. Ethereum tends to be more volatile than Bitcoin in both directions, so it's no surprise that the correction was steeper. In fact, Ethereum pulled back all the way to its 50-day moving average. There's that 50 MA again, and on the daily time frame, the 50-day MA is very powerful support level. And you can notice here it was the first pullback to touch the 50 MA since the breakout, and the buyers stepped in sharply right at that 50 MA, and the price rallied back. Now, we got several weeks of chop and a bit of volatile price action here around these 8 and 20-day EMAs. There was a bit of a tug of war between the bulls and bears. And then it looked pretty bad there for a while because we dipped back below that 50-day MA last week. However, notice that we held the prior lows. We had some horizontal price support here. And again, we had some, you look at these candlestick patterns here, you see the long wicks. It indicates indecision, and all the moving averages were overhead. But yesterday, that all changed. Yesterday, Ethereum busted out. Broke out above its 8, 20, and 50-day MAs, which had all shown confluence right at the resistance level. So now we can see that, much like Bitcoin, Ethereum has rallied above the high of its prior consolidation and is now consolidating near the highs, and it's looking pretty solid. Now, Bitcoin and Ethereum typically lead the way rather than the altcoins when we were recovering from a correction. So first we'll see usually money flow into Bitcoin, and then into Ethereum, which we're seeing now. Notice how Bitcoin's taking a pause as Ethereum now is seeing the momentum. And then next, that often filters down to the individual altcoins. NEAR, near, is showing great relative strength. In fact, it just broke out above a downtrend line here that had formed when the market was correcting. Notice how it actually formed a double bottom rather than setting a lower low. We formed a double bottom during the correction. And then last week, the price popped back above the 8 and 20-day EMAs ahead of Ethereum. That's notable. Notice the relative strength. Near led to recovery ahead of Ethereum. Volume came in above average, but still a little lighter than we'd like to see. And now we see Near trying to resume its uptrend. So Near looks really good. We're already in this position in the MTG crypto portfolio. We bought the breakout from that downtrend line, and we're showing a nice profit on it. But it still has a valid buy point near its current level as long as you've got a stop price below the low of the past week, below the 20-day EMA. Next up is Pendle. Look at this amazing relative strength. Pendle's at an all-time high and has been trending steadily higher. While Ethereum and Bitcoin have been trying to recover off the lows, Pendle's just doing its own thing, trending to new highs. Volume is surging higher. 8-day EMA has been acting as support. So this is a prime example of relative strength. And in fact, in the Morpheus crypto chat room, we mentioned Pendle back in February, back when it was less than $3. It's more than doubled since then, about 160% gain since our first mention. We mentioned it because of the fundamentals. We like that it's in the real world asset sector. I'll give you a link down below. Check out the comments to find out more about real world asset sector and what that means. But Pendle is, we really like the fundamentals of it. And technically, on a technical level, obviously it's very strong. Again, we don't chase breakouts. We want to have a good risk reward. So we're looking for a potential pullback entry in Pendle. Note that Pendle is best traded on a decentralized exchange such as Uniswap. If you're based in America, there aren't any American exchanges that enable you to trade Pendle. But stay tuned to our channel because we're soon going to be having a video that teaches you how to trade on decentralized exchanges, DEXs. That's coming soon. So in the meantime, though, keep an eye on Pendle, this chart pattern looking really sharp. And finally, we're keeping an eye on Solana, SOL. Solana was a relative strength leader prior to the correction. And it's been consolidating now in a sideways range for nearly a month. And that's a great consolidation base we want to see because it enables the moving averages to rise up and provide support. Now, notice that in the short term, SOL has actually slipped back below its 8 and 20-day EMAs, but still above the 50-day EMA, which is rising. And we're still holding this double bottom from the correction lows. Now, SOL, we would not want to buy here because it still has overhead resistance of the 8 and 20-day EMAs and could roll over and test the 50-day EMA based on what the chart looks like right now. However, if SOL gets above its 2-day high, basically above yesterday's high, above the 185 area, that would put it back above the short-term consolidation and above its 8 and 20-day EMAs, and that could very easily flip momentum back to the bulls and lead to a quick rally all the way back up to the prior highs and potentially break out the new highs. So we're keeping an eye on SOL. Again, not buying it here, but waiting for confirmation. If we zoom into the 4-hour chart, we can see that basically a rally above the 184.60 area. So like I said, 185 would also put it back above the 50 MA on the 4-hour. There it is again, that 50 MA on the 4-hour chart acted as support on Solana, acted as resistance, now acting as resistance again. So a move back above that could be a potential buy trigger for Solana, again, keeping our stop in place below the swing lows. If you enjoyed this video, check out more of our hand-picked content to help you learn how to be a successful swing trader. Click on either of these videos that pop up on your screen now. And to learn more about our crypto swing trading service and how Morpheus Crypto can help you succeed, head on over to morpheustrading.com and click on Crypto Picks. See you in the next video.